Good morning, everybody. It's Joe Neighbour from Signal Centre with a fresh roundup on all things FX for you today. So jumping straight into the headlines, yesterday risk appetite held firm with gains for equities and risk-related trades. That had a knock-on effect on the dollar, which lost ground amid strong demand for riskier assets, but it did recover from fresh three-week lows as conditions turned more cautious. So I'm going to jump straight into the charts now, starting with the dollar index. And it still, in my mind, remains bullish while it's within this uptrend channel, as you can see highlighted by these yellow bands. Yesterday, we did see a close below this black line of support that I had on my chart at 93.73, and we're now testing support below that at 93.43, which also is kind of marrying up with this lower band of the uptrend channel. So ideally, we need to see some buying step back in pretty soon if we're going to hold on to this bullish channel and see higher prices. On the upside, resistances still remain at 94.47 and 94.74. Overall, for me, I still think the outlook for the dollar index remains quite positive in the short to medium term, despite there being a jump to riskier assets in recent sessions. Now, obviously, this will have a knock-on impact on what's going on with the euro-dollar situation at the moment. For those that have been watching these videos for a while now, I've been talking about this head and shoulders top, which did break down, and we've seen a continuation lower in price. Yesterday, Euro USD was little changed, but the Euro does appear vulnerable on some of the other crosses. Now, we rallied into this resistance level at 116.64, which is this previous swing low here from the 20th of August. And now, while that remains the case, we are seeing sellers step in and maybe take profits or lighten up their positions, or maybe even initiating fresh short trades from here. So overall, the outlook still remains bearish for me on the euro dollar front. I'd be looking for opportunities to sell into strength if they present themselves. Moving on to the yen, that gained some respite yesterday, particularly on US dollar, Japanese yen, which retreated from 47-month highs. Let's just have a quick look at that chart. Quite interesting. It's broken out through this corrective channel, smashed through all of these resistance levels that we had on the chart from 111.65 up to 112.28. We have stalled now into this blue line of resistance that we've got on the chart, 114.32. So just sort of taking a closer look at those levels. We've posted some doji looking candles, some a big one there which was posted new highs but then closed back below the resistance level, and today we've seen some follow through selling to the downside. So looks as though this is going to be a fairly stiff area of resistance for euro US dollar. Why this level is relevant, we have to go some way back on the left hand side of the charts, back to here, October 2018, and initially back to actually May 2017, when this area of resistance started to become relevant. So we've seen 1, 2, 3, 4. This is the fifth test of this resistance level that we've seen since 2017. Whether or not it can overcome it will obviously have to remain to be seen. Obviously, the weakness in yen has been very persistent of late, and we haven't seen too much in the way of any pullback. So maybe we are going to see a little bit of a cooling off into this resistance level. We'll have to wait and see. Looking at some of the other yen crosses as well, just to give you a bit of an idea of what's going on there. This is Aussie yen. Completed a really nice inverse head and shoulders bottom, broken through multiple resistance levels between 81.97 to 82.28. Didn't look back at all, and we've pretty much seen 10 or 11 consecutive days of strength, but we've rallied into this key level of resistance at 85.80. This was the previous swing high that was posted back in May earlier this year. Now, why I like this today, because what we're getting at the minute, and it is early in the session, is a bearish outside candle. We've made new highs on the session, but we're now erasing all of the gains that we made yesterday and engulfing all of yesterday's price action. So this could be a really key reversal point for Aussie yen, and we could see some strength coming back into the yen after, as I said, some really persistent weakness. Moving on quickly to sterling, that has recovered some losses after the UK CPI data with favourable risk conditions complementing the yield. So GBP USD did have a decent push to the upside. It's broken through this short-term downtrend that we had highlighted on the chart. It does look a bit messy though. I can't really make too much sense of this at the moment. Price action just looks like it's going to continue to remain choppy for me. We saw some really false signals down here. We saw a break of this support 135.76. It was then backed up with further selling. At that point, the sellers were thinking, right, this is really going to start heading lower. But the reversal higher has been very sharp and unrelenting and not really allowed anybody to get out of that trade if they got caught in it down here. So we've got some resistance at 138.91 to keep an eye on. That for me is a key level to watch on cable today and over the next couple of days. But I don't really see there being too many opportunities on this. I think where I'd really be looking at is potentially a reversal in these yen pairs, particularly Aussie yen with that big bearish outside candle that's forming today on the daily chart. Obviously we need to see it close ideally to get a really firm signal on that. So keep an eye on that come the close this evening, and there could be some opportunities arising there. That's the roundup from me on the FX front. I'll be back next week with some more. Until then, trade safe, everybody. Goodbye.